It's really three bills. Permanency for families and small businesses. One, it's just fair to make those permanent, as we did the corporate cuts. Two, incredibly pro-growth, grows about 1.5 million new jobs on top of what we're already seeing, and 2% growth on top of what we're seeing. So important there. But you also go farther. Look, we didn't do enough, I think, to help businesses offer savings plans and workers to take them up. A lot of our medium and small-sized businesses don't have those types of benefits.
You mean 401k type of?
Perfect time. Yeah, exactly right. Plus, look, we think workers ought to be able to continue to save past 70 and a half. We're starting a small change so that if you have a savings plan, you don't have to take it out at 70 and a half. You can start to continue to save throughout your lifetime. And then there's some great changes for education savings, whether it is to be able to use your savings for apprenticeships. You know, Mike, you start out as a technician.
Yeah.
I think.
Apprentice mechanic, that's exactly correct.
Absolutely, and as well as paying off student debt. And then the innovation side of it, I think, is just a really smart, targeted means to encourage more entrepreneurship here.
We had the Journal reporter that I'm sure you saw the piece on the repatriation, the sort of the sluggishness of the repatriation. Was that a surprise to you that it hasn't come back more quickly?
I think it's more of a timing issue. I think there's much more of those dollars to be repatriated. My anecdotal discussions around the country are the businesses are already planning to bring those dollars. And I think the advantage here, you know, we used to have that like 1 year holiday. So rush it all back, no planning, no real game plan for how you use it. Businesses are doing this differently because it's permanent. Now they're thinking through, when do we bring it back, the maximum economic growth for us. And so, yeah, I think it's actually good that they're being deliberate about it.
Is there anything you can do in 2.0 that would give them more confidence? I don't know. The Journal reporter says that there's still uncertainty about the ramifications of doing it, or the
he says
way
the
of doing
regulations
it,
haven't been written.
Regulations aren't written.
So I think it's a case of where best do we deploy it. And that was one of the big changes we made in tax reform. And while I think as early, these early indicators are just so positive, but I think the best is yet to come, because a lot of what we did was designed to influence where they locate facilities, research, patents, their headquarters. Those decisions are being made to move these things back. I think it'll take a while to manifest itself in the economy, but I think that's why what we're doing actually will prolong the economic growth for the U.S.
Well, you keep your head down, I know, and you know, I always try to get you talking about some of the water cooler issues, but I've heard a lot now. I've heard that, you know, maybe we're doing okay now, but it's front end loaded. And what do you expect when you blow out the deficit with a big, you know, you got a mature economic cycle, and then you throw gasoline on the fire. Of course, you're going to get 3% for a while, but it's not going to last long, and you're going to end up paying for it with higher deficits and higher interest rates.
So I disagree on almost all that, because this really wasn't designed to be a huge jump start at the beginning. This has been really encouraging to see the impact right off the bat. It's really designed to leapfrog America back to the lead pack as the best place on the planet for these new investments and jobs. So you got investor confidence up, you have consumer confidence up, you have manufacturing confidence, which is usually the most pessimistic, the most skeptical of the future. They're at a 20-year high, and so I see the revenues coming in the federal government higher this year than last.
Up 1% for the first 11 months of the fiscal year.
Individual revenue is up, payroll tax revenue is up, and the corporate revenues, while they're down, are better than expected because we're seeing this growth.
You thought it would be down more than 30%?
Yeah.
For corporate?
Yeah, I did. But corporate's such a small part now, really, of our entire. So I think, look, we won't know if this pays for itself for a number of years. But early on, it's again very early, really encouraging.
Can I just ask what happens to taxes 2.0, tax cut 2.0? What are the odds of it getting done before the election, and what are the odds after? Yeah,
so the time is short before the election. I think the Kavanaugh nomination and confirmation, and we've got about a week or so in the House.
You brought that up. I wasn't going to bring that.
From a timing standpoint, you know, we're going to put the ball in the field and move it through the House to the Senate. It's in 3 bills, so Leader McConnell's been clear. When I see support, 60 votes, we'll move those 3 bills as we see it.
And so I see that support right now?
I think after the election,